What I'm talking about is you not even being in the room. And that's a huge difference if you're not even in the room when they discuss the yes or no, right?
Do you watch a lot of people get rich? Well, this could be an opportunity as well if you learn about venture capital. And that's why we have this masterclass. If you want seeking investors or maybe want to make businesses in venture capital or maybe just become a brilliant investor, this masterclass is definitely for you. We are powered by the LE Fitness. Thank you so much for hanging out with us here today. But in this episode, we're going to show you how the decisions are being made inside the venture capital. And that could be good for you if you want to get rich and learn how the venture capital works. Stick around because at the end of this episode, you know exactly what they are talking about. And as always, we have Kat, our business lawyer, here with us. You're going to explain it.
Hello.
Hello. How does the decision go around inside the venture capital fund?
Yeah, so we're going to give you some key insights that you can think about, regardless of whether you want to work in venture capital or if you're seeking a venture capital investment, because it's very different from if you have had negotiations with angels priorly. Because angels, they invest their own money, right?
Yeah.
A VC firm will gather other people's money and they will invest some themselves because the LPs, the investors, will demand that typically. And then they pool that money and make the investment. But what we're going to talk about here that differentiates a lot between a typical angel investor and the VC will be the decision process. And of course, every VC firm has its right to do whatever they want. So this is the typical structure, of course.
So let's start. And if you want to have more knowledge about venture capital, do not forget to like, subscribe, and share this channel to your network.
Indeed.
So let's start.
Well, we typically talk about a deal funnel. And there was a brilliant, I forgot his name, so we'll drop the link down below, a professor from Stanford who looked at the mid-sized VC firms in the US and said that one of 100 will turn out to be a yes of all of the companies they look at. So if they look at 400 a year, 4 would be invested in. So I mean, it's narrow who even gets that far. But we'll describe it in 4 steps. So step number 1 will be the deal sourcing. And that can pretty much be anybody in the deal team at a venture capital firm, anybody with sufficient contacts in the firm really or employed in the firm to pull that and present it for the deal team. So number 1 will be somebody in the deal team, investment manager, it can be a partner, it can be an associate, somebody, looking at the company and getting excited. Step number 1, the deal sourcing, you need somebody within the VC firm getting excited. Then they will often take it to the deal team. And they need to get somebody, again, within the firm. Step number 2, it can be the deal team, the director or the partner of that deal team, sufficiently excited as well. So they keep evaluating and digging deeper and deeper into that startup. And if you get to that second step, step number 2, where the deal team, the partner, the one with sufficient mandate, is excited, and you have a clear outlining what the deal would look like, then that director, partner, will take it to the investment committee. And I don't know if you ever heard that you often say that never call a VC partner on a Monday because that's when they have their investment committee meeting. I don't know if everybody has that, but that's like the standard case.
Now you know.
Yeah. So what's good to know about this third step about bringing it up in an investment committee, it is that when you look at Dragon's Den, for example, right, or Shark Tank, you will be pitching your own startup to the investor. What I'm talking about is you not even being in the room. So you need to empower that partner or that investment manager who's going to present your case for the investment committee. And that's a huge difference if you're not even in the room when they discuss the yes or no, right? So that's a big learning. And if you're breaking into venture capital and want to work with it, you need to understand how much politics goes into competing for that yes in the investment committee. Because if everyone's looking at hundreds of deals every year, but only a few get selected, you'll be in trouble if you have not presented any deals that go to an investment for a couple of years. Then you might be called into question. And also, if you do present a deal and it gets to a yes, and it doesn't work out in the end, you will be held accountable. So you need to understand this dynamic that if you're going to champion a startup, an investment case, you need to know that it's important to have some successes, but also that they do materialize in the end, at least in the long term. So that's number 3. You get to the investment committee, and at that point, like I said, you want the clarity enough. What's the ticket size? What valuation are we talking about? And if you get a yes, that typically will mean that you do at least the confirmatory due diligence. You dig deep and get to the paperwork. And then you have step number 4, and that will be pulling the trigger, using the gunpowder, saying the yes. And that will, of course, mean that you need to check, did everything work out? If the investment committee had a yes, no, or maybe, perhaps there was something they wanted to dig deeper in, the IP, the competitive, or they have questions about the team, the founders. So you need clarity, and you might need to bring that up before you get that final yes. So typically 4 steps. But it can also be that you're talking to a VC, let's say that Stellar Fund, with your 5, we use that as an ongoing example. You, Ida, founded Stellar Fund Management with Stellar Fund number 1, 2, and 3. And you are the senior partner, so you already have a mandate. Perhaps you can use up to 50 million on your own. You utilize the deal team and you say yes and you pull the trigger. That can be. But typically, you will want to check some balances and you will want to be challenged internally. And then, as I said, you might bring the founder in to do a presentation, but then they will leave the room. And you will challenge it and you will want to either advocate saying yes and somebody else might say no. And it might even be politics. They might want to say no because they feel that you already pushed 3 deals through and they have not gotten one of their cases through. So there's a complex dynamic to think about.
That you must know about as a startup founder.
Exactly. So it helps either if you want to work with venture capital, understanding how much relationships, how much communication, how much it is positioning the case, and also be held accountable for the case going forward. And of course, in venture capital, home runs counts, strikeouts don't, which means that it's okay that you fail some. That's not it. But know that you will be held accountable. And understand how much relationship building. And as a founder pitching, understand how much it's about empowering the deal team or the investment manager that you're communicating with so that they can go to the rest of the venture capital firm and pitch your case.
So that's why it's so important for startups to always be up and networking, pitching, so you just meet the right person.
And understand the complexity, because maybe if I'm talking to you and you're just an investment manager at Stellar Funds, you might be super interested about this hot new tech aspect. But if I try to understand Stellar Fund Management as a whole, and I look at your track record and the other cases you have invested in, it might be a lot of sustainability edges. Then I might realize that, okay, this is your baby, the tech part, but perhaps when you go to the investment committee, you will get hammered on the sustainability aspect. So I need to understand the interest of the collective, not only what gets you fired up.
Okay, so if I understand it right, I mean, when you do the investments, if in the VC fund, does everybody need to be on board with the idea they are investing in? Or
that depends on how the investment committee, I mean, it can be a majority decision.
Okay.
It can be that only the partners get to vote. But do know that you will be challenged, in particular if you are an investment manager, or you're dealing not with a partner but an investment manager.
Thank you.
Thank you.
That's so valuable knowledge. And now you know how the decision process are being made inside the venture capital funds. Thanks for today. And do not forget to like, subscribe, and share our channel to your network, because this is crucial and really important knowledge that we're sharing. And remember, it's knowledge sharing and not legal advice.
Indeed.
Thanks for today, and rock on with your businesses.
Don't forget our sponsors.
We are powered by the LE Fitness. Thank you so much for hanging out with us here today. Hej då!